Hello, entrepreneurs. Joe DeChara here with my regularly scheduled 2 p.m. Facebook Live going on at 4 o'clock for reasons beyond my comprehension. Anyway, Joe DeChara here with the Joe DeChara Show, and I am presenting you with How to Win at Business, and brought to you by my favorite Bedrock University. And today, let's see what we got storing for today. Bedrock quotes. Let's see what quotes we got. Your purpose in life is to find your purpose and give your whole heart and soul to it. I'll give a quarter to anybody that could tell me who said that. That's right. It was the Buddha. And here's another one for you. Decide upon your major, definite purpose in life and then organize all of your activities around it. Okay, again, if you could give me the person that said this within the next 5 seconds and put it in the chat, I will send you a quarter and an autographed copy of my next book on CCorps. And that was said by Brian Tracy. I actually thought it was somebody else, but Brian Tracy, and nobody wins this time. But tonight, what I'm going to take you through, folks, is how to save massive dollars when paying yourself. You know, and let me just say, if you don't know me, I am a serial entrepreneur with the CPA license coming to you live from downtown Flushing, New York. I work with, I spent my career, 35 years working with corporations, established businesses, and I've pivoted. I started pivoting last year to work exclusively with solopreneurs and new business owners, because most new businesses fail. And that's a fact. And I say this time and time again, but we fail for the wrong reasons, not for the reasons that they publicize: a lack of capital, a bad economy, too much competition. That's nonsense. When it comes to starting a new business, there is about a 96% failure rate for new businesses. And it's because of some of the things like this. It's because people don't know how to really pay themselves. And I like to go through this with some of my lives. And the fact is, folks, that life is difficult. There's no way around it, whether you like it or not. And this quote comes from a guy that has an initial as a first name, Dr. M. Scott Peck. And he wrote this in a book called The Road Less Traveled. That's what it was. And this quote was one of the things that gave me some peace, because I said, oh, I'm not the only one that's going through this. You mean it's hard for everybody? I guess I could accept that. Not like I really have a choice, but it's hard. And then what we do as entrepreneurs is we make it even harder by going into business. So here we are. Life is hard. We want to start a business. We got a 96% chance of losing it, of going out of business, of not succeeding. And it turns out that this is what most people go through, because let's face it, business is confusing. According to Forbes, 8 out of 10 businesses fail. According to me, 9.6 out of 10 businesses fail. But this is coming out of Forbes, and it doesn't matter whose statistics you're looking at, really. But the fact of the matter is that most businesses do not succeed. The ones that stay in business, a lot of them barely survive. They're not succeeding. They're just staying in business. And they're on the fringes. Setting up and running a business is not easy. And I don't know how many pictures and in some ways I could say it. But it's easy to make wrong decisions. If you don't even know what you don't know, how can you make the right decisions when it comes to things like legal structure and paying yourself? Most entrepreneurs do not realize that there are different ways to pay yourself, and how you pay yourself makes a big difference. And this comes down to one of my topics that I go through every so often, which are legal business structures. The simple act of converting your sole proprietorship into an S corp makes a incalculable amount of difference. It turns that 96% failure rate maybe to 50-50. Maybe you got an even shot. It's that much. It's that much of a swing. Now, there's only 3 legal structures that anyone can have in a business. And that's number 1, sole proprietor. That's when you're not a solopreneur. I'm a solopreneur. Let's get this straight. I am a single owner entity. I don't have any employees. Anyone that works with me is a subcontractor. I don't have any full-time people. I don't even have any part-time people. Okay, this is the business model today. But I am not a sole proprietor because I have 2 corporations. I have an S corp and a C corp. So that's the other way to do business. Or you could be a limited liability company. And unfortunately, being an LLC is the same for tax purposes as being a sole proprietor. So if you've seen this presentation before, it's because I've done it. But it's so important, it never changes. It's important to keep putting it out there. So being a sole proprietor, you basically have no choices. It's, listen, whatever you make, you're paying taxes on it. We don't care if you take it out of the business, but you're paying 15% Social Security tax on your net profit. Whether if it goes, like I said, if it goes in the business, you've paid yourself. That's what the IRS is. It's there. You pay taxes on it. So if you made $100,000 and you didn't take any of it personally, you still got to pay your taxes on that. And 15% right off the bat goes to Social Security taxes on net profits, even if you don't take the money. Same thing with an LLC being taxed as a sole proprietor. You are getting taxed at 15%. So the LLC takes away the legal problems with running a business, where you're not shielded personally, but it does absolutely nothing for you on the tax side. As a corporation, now I told you I have a C corp and an S corp, and there's a reason for that. But if you're just a C corp, there's really only 2 ways to take money out, and that's as a salary or a dividend distribution. And when you do a dividend distribution, if you're not an S corp, that's where they get you with what they call double taxation. I haven't seen really at this level any C corps, small business corps that are actually paying dividends. That's more for public companies. So you don't want to be a C corp and take a salary, because now you haven't gained anything. Now, as an S corp, you actually have a couple of ways to take money out. You can yeah, if you have profits, look, here's the kicker, folks. You you can't take money out of your business unless you have profits. I forgot to mention that. First, you have to make money. So if you are making money, now you have some leeway, you have some choices as to, how much of that do you take as salary and pay into Social Security. So that 15% FICA tax is no longer uh, black and white. It's okay, we can do some tax planning. We don't have to take it all as salary. So we could take maybe half of that 100 grand as salary, pay FICA tax on 50,000 instead of 100,000, take dividends. But now this isn't subject to double taxation because the corporation is not paying any taxes on it. You see, a C Corp will pay taxes on their profits. So first, the C Corp has to pay taxes. Then you take it out as a salary and you pay taxes. And then if you take more profits out, it's taxes and dividend. So that's the story with that. Now, also, this is a little known trick that I like to use. When you set up an S Corp, a lot of times the corporation has no assets. So you might have to take stuff from your personal arsenal, like a desk, a computer, a car, and contribute it to the business. Now that business, your S Corp, actually owes you the fair market value of those assets. So if you have a car that's worth, I just did this with somebody that had a car that was worth $50,000 last year. They put it into the business, and now the business actually owes them $50,000. So that's another way, and you can't do that with a sole proprietorship. You can actually do it with a C Corp, but that's another story. There's several other ways that you could save money. You could pay your kids. Okay, you could also pay your kids as a sole proprietor. I'm going to give you that. But you could, as an S corp, it's transparent. I mean, there's no actually, it's stealth. There's nothing saying that you're paying your kids. In other words, as an S corp, you're keeping your personal stuff and your business stuff separate, and that is key, especially if you are unfortunate enough to ever get audited. And sole proprietors get audited more than any other business segment. Uh, you can have the business pay you, or actually, the business isn't going to pay you. The business is going to reimburse you for the business portion of the house or apartment that you're using. Okay, the business, you're not going to pay yourself rent, because if you pay yourself rent, now you just created rent income. You're going to reimburse yourself for those business expenses. Now, if any of this makes any sense to you and you do nothing, you've wasted your time. So that's why I say you got to take action, have an action plan. You can connect with me. You can go to timewithjoe.com. But before I get into that, I do have a special offer for you today. Because of the chaos that I see out there, because so many businesses fail. And they fail, like I said, not for the reasons that you might think, a lack of capital, a bad economy. That's not right. I believe that most businesses fail because they have a lack of proper guidance and direction. And that's why I put together my complete startup CFO services. Now, what does that mean? Well, as a CFO, which I was for plenty of corporations over my career, I took a complete business overview. I wasn't just looking at the bookkeeping. I wasn't just looking at the accounting. I was looking at how does this business tie in with the owner and their objectives. Part of that is setting up the accounting system, because without the proper accounting system, you can't measure results. So these are the sort of things that I have done and CFOs do for larger, more established companies. When I say larger, I mean larger than a solopreneur, because that's what I'm talking about. I'm talking to you if you're a new business owner or a solopreneur. Okay, so what my CFO services includes is 24/7 access for anything that has to do with your business. And we keep your books in real time. Basically, I got your back, guaranteed, when it comes to your business and your taxes. Now, normally I start at $497, let's say $500 a month for this kind of package. And I'm also, but besides that, I'm going to throw in, I'm going to look at your tax returns. I'm going to review your tax returns to make sure that they've been done properly. I'm going to help you with Napoleon Hill's definite chief aim to help you get you and your business on track. And I'm going to offer you to set you up for free on my new WIN system, which is a program-based, Excel-based, real-time interactive system that is like a to-do list on steroids. So my WIN system will help keep you on track and keep you accountable to yourself. And so today's price, what I'm offering is, it's not $497, it's not $397, it's not even $297. What I am charging is only $47 a month. No strings attached except for a $97 setup. Okay, so if you sign up for it with me, I got your back, $47 a month, all inclusive, your bookkeeping, your business advice, your tax planning, anything that you would need from a CFO. And all you got to do is go to Time with Joe, book an appointment with me. Let me know that you're interested in the CFO practice offer. This is not a scam. It's not a joke. I've had people signing up every day. There's only so many clients I can take on at a time with this offer. So if you're interested, please connect with me. And even if you're not interested, if you know somebody that might be interested, I have affiliate programs. So if you're interested in doing that, and that's my story. I will be back again tonight at 8 or thereabout, maybe 8:30. And God bless and thank you. And that's my story.